Hey guys, what's up? It's Barrett's Music here today with the Robinhood app. You're probably saying, what are you talking about, Barrett? Robinhood app? Well, um, I'm thinking about starting to do other things on this channel besides just music. The main three things I'm really interested in or have been interested in the past couple of years have been, music for a long time, but gaming for a long time. I'm probably going to do some more gaming videos, as well as, finance, business, and investing. Just in general, I've been learning about finance and business and investing for a couple of years now. I actually learned about it for a good 2 years before I ever put any money in the market on purpose. Well, that's not true. If we go to all time, I did start I put a little bit of money in 2017, but I did really stupid stuff because I didn't know what I was doing. And so I basically, everything I did when I did that the first time, I pretty much sold for a loss because I didn't do some things that I'm going to talk about today. So far in the market, I've put in almost $4,000. Now, you got to understand, this is just for entertainment purposes, and it's just something I'm interested in, so I'm making a video on it. I'm not telling anybody what to do, obviously. Don't invest, especially if you don't know anything about the market. Even if you do, still don't invest because you can lose all the money you put in the market. And I know that. But at the same time, savings accounts pay crappy interest rates. And so my story is, like I said, in 2017, I started putting a little bit of money in the market like an idiot. I didn't know what I was doing. So then I had all this time that I didn't, put any money in the market. And I already had about 10K saved in my savings account, and it just sitting there, And I started thinking, why don't I put some of that 10K and invest it, So I think it's pretty smart myself. I invested about 40%, as you can see. So I still have a good 6,000 in my savings. And, 60% of my savings still left, which makes my wife happy and makes me happy and my parents and all that. So when you invest, you need to have enough money saved up first before you even start. That's a really big thing when it comes to investing. Now, as you can see, today was not the best day to do this video because the market is in what they would call a bear. It's a bear market today. It's going down. So you have a bear market and you have a bull market. Bull market means the market's in an uptrend. Bear market means the market's in a downtrend. And you also have sideways. But typically the market's either in a bear or bull kind of status. And it's been in a bull status here lately, and that's one reason why my portfolio has done well. Basically, I started in early September after just watching videos about the market for a good 2 years. And the first thing I did was I invested in Apple because I just told myself I want some Apple stock. Now, what I knew I was going to do from the very beginning, and this is very important if you do start investing, is you want to stick with more of blue chip stocks and not penny stocks. So a penny stock is, I think it's $5 and below. So as you can see in my watch list here, just for the fun of it, this is stuff that I'm not invested in. It's just different stocks that you're kind of watching and looking at just for the fun of it. You'll see that some of them are penny stocks, like Rolls-Royce is a penny stock. There's a couple of silly ones I have on here. Ideanomics, IDEX, that one's a penny stock. And funny enough, I actually made money off of this, but it was a very speculative thing. I bought it for $240 and sold it for $299 one day. That was the only day trade I've ever done, and I did it because I'm on a Facebook group. And so I could see that, I could tell that I basically just got lucky. I saw in the morning that it was on an uptrend, and I got in on it early, and then I sold, way before it hit its high peak. So basically what I was trying to say is you want to stick with blue chip stocks and companies that are going to be really reputable. So like Apple, Microsoft, Tesla, all of these sorts of companies that are blue chips. Obviously, Google and Amazon. I don't have any shares of Google or Amazon because they're too expensive. So Alphabet is Google. It's almost $2,000, which is fine, And you can actually buy fractions of shares, but and Amazon is up to $3,000. Man, That's crazy for a share, one share of Amazon. So, like I said, I put about $4,000 into the market. How did I do it? I put about 1,000 into Apple. I put 1,000 into Microsoft, and I put 1,000 into Tesla. Now, Tesla has been my most profitable investment thus far, just because that stock is going crazy. I'm up $333 on Tesla currently. Um, but yeah. So as you can see, this is the amount of profit or loss. So the only thing I'm lost money on so far is just a little bit on Microsoft, because I did buy quite high. Now that's also another thing you want to learn about if you're going to invest any money in the market is your buy-in points. Like right now, Apple, I wouldn't recommend buying Apple at the point it's at right now, because when I bought it, it was at $113. And if that's why it's important to look at the chart, because if you go to like a 3-month chart and you look through, you can kind of tell, well, first off, it's been very volatile, but that just means it's gone up and down a lot. But you can kind of tell the average. Like if I look through, the average is somewhere around in $100, 100, 110, something like that. So you have some low spots, and that would be theoretically when you'd want to buy, but no one can perfectly time the market like that unless you know how to day trade and read the chart really well. And then even those guys are still just speculating on chart analysis. But the point is, you can use a chart to tell when a stock is really high, what the high point would be, and kind of what the medium point for the stock would be over a span of time, and what the low point would be. So the best thing you can do before you put any money into a stock is look at the chart, okay? A stock could do all kinds of things. You can look at different charts. You can look at the year, so you can notice that, Apple's been in a major uptrend for the most part. Obviously had some dips, but that can tell you, information. So you want to look at your different charts before you invest. And that's actually what I did. I waited till it was around $113 and got in. Now that doesn't mean that I knew anything special. It could have gone down to 80 and I could have just kind of kept losing money, but it's Apple. So you just kind of, you're basically placing bets for the most part. So with Microsoft, I didn't do that great because I bought in at 213 and I just wanted Microsoft, man. It was, and I'm thinking about holding it long term. See, there's a difference between investing and trading. Trading is when is more of a short term thing. So if you're trading, you're going to be looking for a stock that has a lot of volatility, and you really have to know a lot more. The reason why investing scares people is because people think investing and trading are the same thing, and they're not. Investing generally refers to holding more long term on your investment. So that's why I'm not very scared when it comes to the fact that I have 4 shares at $213 for Microsoft. Even though $213 relatively is quite high to buy it at, because if you look at the stats right here, you can see that the high for the stock is 215. Of course, the 52-week high was 232, but basically what I'm trying to say is it's on the high side. The low would be more around 200. So in other words, if you can get this stock more around $200, which if it keeps going down, it'd be good. Then that would be a good buying point, because if you don't, in other words, you don't ever want to buy a stock theoretically, right? You can't ever really 100% predict this, but you got to look at the chart. You don't ever want to buy a stock at the very top, right? So, the very top for Microsoft at this point, is somewhere around, 220, around in that area, 214, 220, something somewhere around in there. So like I said, I'm on the higher side. I'm not at 220, but yeah. Some of these, like Pfizer is the company that's doing the vaccine. So that's another speculative bet. So you can call these speculative bets if you want, but I consider some of these not speculative, like the longer term ones. Basically my main 3, Apple, Microsoft, and Tesla, are the only ones I don't really consider speculative. I have some ones that are kind of speculative but making me money, like Carnival. The reason why I bought into Carnival 10 shares at 17 bucks, it's already at 22 bucks, is because it's down right now because of COVID and all that. So what's funny about stocks, what people don't understand generally, is that you want to buy a stock when it's down. You, as an investor, you actually want the market to crash short term. Okay, so that's what I was just saying. That's your buy-in point. That's a good example of a buy-in point. Because then when you have a bull market or when it goes back up, if you're a trader, then you can sell. Or if you're long term, you can still sell and take profits along the way, depending on how long term you want to be in the market. If you're trying to go for retirement, then you just kind of keep putting it into a stock and hold. And then the point about that is, depending on the stock, like if you look at Carnival, the 5-year, the highest it's ever gotten, is around 70 bucks. So on average, it's more around, really it's more around 30, 40 bucks on average if you look throughout the year. But right now, it's down crazy. So, unless Carnival goes completely out of business, which I took one of their cruises and I know how good of customer service they had. That's another reason why I invested in Carnival, besides the fact that it's cheap right now. So I'm really just kind of betting that it's going to go back up to where it was before at its higher point once COVID's gone and the cruises start coming back up at the 40 range, which means I'll double my money or more, which I've already got 50 on it. And when you buy a stock, you decide how many shares you want, and you kind of have a game plan in the first place. All right. You kind of have a game plan in the first place. So say I knew I was going to buy 10 shares, so I knew I was going to put about 200 bucks. Actually, I didn't put that much into it. I put like $100 something into it. And I was thinking, all right, if it goes back up to this point, then I did the math. That means that my max profit would be this, right? So if your max profit isn't even enough, then what's even the point? So sometimes you have to think that way. Which, by the way, all I'm telling you guys is just stuff that I've learned. I'm not an expert. I've been learning about finance and stocks and investing for the last 2 years, but I've only put money into the market in the last 3 months. But I've gotten a 12.61% return, so I've gotten about $500 on my investment so far. Now, one thing I haven't talked about yet is you want to diversify. This is something Warren Buffett said a long time ago. Is that you don't want to put all your money into one stock. Like, in other words, for me, it all depends on how much money you have in the first place to invest. For me, like I said, it was around 4,000, which sucks because that means I don't even have any more capital to really put into stocks until I save more money and decide I want to put more money into stocks, or open a retirement account and put like monthly money into stocks that way. But if I would have put all 4,000 into Apple, then that might have been a good idea. But it was good also to just kind of spread it around, because as you can see, if you go to returns, which means return on your money, most of these investments are doing good. But say I would have put all my money into Microsoft, well, right now I'd be down quite a bit. I would be down whatever percent. It's down 1.95. So that's not that bad. I'm just saying you want to diversify, okay? Now don't just invest in everything I've invested to. I'm definitely not the person to be following if you're going to follow stock picks. I'm just trying my best. Now you also want to invest in ETFs if you're going to invest, because ETFs are exchange traded funds. In other words, it's a fund of a lot of stocks put together. So you're limiting your risk like crazy, which is why I really wanted to start putting money monthly into this ETF, because it tracks the S&P 500. So there's lots of different ETFs out there. And that's typically what people do put into, like IRA accounts or whatever. They typically invest in ETFs and mutual funds so that they spread they diversify and spread their risk. Because, yes, investing in stocks is risky, yes, but it's all about spreading your risk. It's all about calculated risk, not silly risk like I see on Facebook all the time in these stock groups where people are putting, there's people putting 10 grand in a Rolls Royce because it's at $1.81. But if they look at the chart, the highest it's ever gotten is, 14, 15 bucks. And, you know, you really have to do your due diligence about a company, because other things you have to do too is, you know, you have to learn about different aspects of the company, like what are their revenues, what's called PE ratio. PE ratio means price to earnings ratio. So if the price of their stock compared to their earnings, like Apple has a pretty good PE ratio, 37. That means the price of their stock divided by their earnings. That's the ratio. So typically you want that to be low. You want that to be a lower number. If it's a lower number, it's good. But that's not always the case, because like a growth company like Tesla that hasn't been around that long, that has plenty of growth ahead of it, you invest in Tesla because it's a growth company, not because the revenues, because their PE ratio is horrible, meaning the price of their stock, in other words, is overvalued compared to what their earnings are. But that's because you're betting that their earnings are going to go up a lot more than they are right now. So I know I said a lot, and I know there's a lot to all of this, but like I said, man, that's why it's just an interest for me. It's just honestly, it's a hobby. Just like, business isn't a hobby. It's what I do every day. But learning about finance and business and investing is definitely a hobby. Teaching music is not a hobby. It's my business. But I just figured I would kind of throw this out there, because this is my YouTube channel and this is something I'm interested in. And if I can throw something out there to help anyone in their financial situation, if they want to start investing and building wealth, not that you're always going to build wealth when you invest, but you do build wealth when you invest, more so than just letting your money sit in a 1-2% savings account. Those things are basically worthless, but they're zero risk, but they're also barely any reward. Now, of course, there's all other things you can invest into, like real estate, which is what my dad does. And I obviously would like to do that eventually too, once I have enough capital saved up to where I could, maybe buy a rental property or something. But you're talking about a lot of money for that kind of thing, or you're talking about a lot of risk when you get a loan for, real estate's a whole another ball game. My dad knows a lot more about that than I do. So thanks for watching, guys. If you're interested, check out the link in my description about Robinhood. Like I said, I'm not telling you what to do. I'm not telling you that you should invest. These are all personal decisions that you want to make for yourself. And thanks for checking out the video today, and I'll see you on the next one.